From field to shelf, we ensure precision and reliability.
Lindsay Australia Limited, ticker LAU.AX, is one of the most important logistics and rural supply companies on the ASX. With revenue down the financials, earning history, acquisitions, risk forecasts, and how traders typically approach a chart like this. Lindsay operates across 3 divisions: Lindsay Transport with refrigerated logistics by road and rail, Lindsay Rural Supply, rural goods, packaging and fertilizer, and Lindsay Fresh Logistics, handling exports of fresh produce.
Together, they service Australia's agricultural backbone, seem fruit, vegetables, dairy, protein, and horticulture. This is a business that touches every part of the food supply chain, from farm gate to export. From our hubs across the globe, we ensure that every product reaches its destination right on schedule. Looking at earnings history from FY24 to HY26, revenue has grown strongly, up 19.6% in FY24, 5.6% in FY25, and 24.8% in the first half of FY26. But profit after tax fell 20% in FY24, and underlying EBITDA dropped 11.7% in FY25 due to margin pressure and higher costs. HY26 EBITDA rose 60%, but NPAT was flat thanks to high depreciation and interest costs. This shows strong top-line growth but pressure on margins and profitability. Lindsay has aggressively expanded its national footprint. The SRT Logistics acquisition in 2025 took them into Tasmania and delivered double-digit EPS growth. GJ Freight expanded their reach into Southwest WA, strengthening dairy and protein logistics. They've also invested over $50 million in fleet and infrastructure, opening new facilities in Perth, Adelaide, and Tasmania. These investments increase capacity, but also depreciation and interest cost, which is why NPAT has been flat. The strengths are clear: strong revenue growth across all divisions, an expanding national footprint, robust demand for refrigerated logistics, and fully franked dividends. But the risks are significant too. High depreciation and interest costs pressing profit, a competitive transport market with oversupply, weather-dependent horticulture volumes, rail disruptions, and potential EPS dilution from share issuance for acquisitions. Analysts forecast EPS of L6 for FY26 and FY27, with revenue growing to $76 million in FY27, and though managed outlooks supported by population volumes, with margin improvement and deleveraging expected. For traders, the key is watching dividend stability, margin recovery, and acquisition synergies. Key levels are support at $0.50 and resistance at $0.70, then $0.80. Lindsay Australia is a stable, growing logistics business with strong revenue momentum, but profitability is held back by high costs and competitive pressure. If margins improves and acquisitions deliver, LAU could be positioned for long-term growth. If you found this helpful, hit like and subscribe for more clean ASX analysis.